Have you ever wondered about the business side of being a creator? Things like taxes, or what can I write off as a creator? And how do I separate my personal from my business expenses? Or when should I create a business entity, like an LLC or an S Corp? And what's the difference? And what's the best for you? I had the opportunity to sit down with my friend Eric, and we talked about all of these things. He's the co-founder of Carrot, which is a financial technology company that helps creators with money. Let's jump right into the conversation. A lot of the creators that I work with, or a lot of the creators in my community, they're just starting out, or they're starting to take things a little bit more seriously. And a lot of them look at it like a hobby. And I always kind of stress the importance of knowing that this is more than a hobby. It's something that they should consider like a small business.
Yeah.
And what are your thoughts on that?
You don't get to make content unless you make money from it. To be able to sustainably support yourself, if you are spending more per video than you're making, that's really scary. And when I work with creators, if I walk into a crowded VidCon, Philip, and I ask them, how much did you make last year? Most people don't even know, which is terrifying. The second reason is if you're tracking your finances, that actually gives you more freedom to make smart, creative decisions. One of my friends is a creator named Tejas Huller, and he primarily was short form content up until about a year ago when he decided he wanted to make long form videos. And for over 3 months, he wasn't making anything because it was obviously a lot of work to make that transition. But because he was tracking his finances, he knew how much he had saved and that he could afford to make that jump. The last point I'll make is it'll also help you just make more money. If you've been making content for a while and you've taken brand deals, you know that brands always go really hard on blowing out their budgets in Q4. And you can get more and bigger brand deals during that time. In an ideal situation, you'd plan your content schedule so that you have really great videos and inventory ready in Q4 when they're ready to give you brand deals. That means you probably have to invest in Q3 and you have to be prepared in Q1. Brand deals are going to dry up. So how do you make the most of that special moment toward the end of the year and make the most so you're prepared when the next year rolls around? And you can't know that if you don't even track your finances.
Yeah, definitely. And just to add to that, I think a lot of times people don't consider themselves a business, but a thing that they should definitely not consider themselves is an employee for these brands. Whenever you lock in a brand deal or whenever you're getting paid from Facebook or Instagram, you're considered a contractor. So you're going to get 1099. And these are the things that basically is like a small business, so you got to treat it like that.
Oh gosh. And it's so much harder to figure all of this out when you're already deep into it. When there's so many easy, basic things you can do from day one that aren't really going to get in the way of you making content that help you set up your business properly.
Yeah, definitely. And let's talk a little bit about business entities.
Totally. So if you're a creator, the most common words you're going to hear around this are LLC and S Corp. So let's talk about what those mean. But before even going into that, there's a larger question. Why should you even incorporate?
Yeah.
Because, hey, I know a lot of creators who are making millions of dollars and they're not incorporated. So what are they missing out on? There's really only 3 reasons why you want to incorporate. The first one is to protect yourself legally. Heaven forbid something goes wrong. If you're incorporated and you've maintained good separation between yourself and the business, they might be able to go after your business's assets, but they can't go after you personally. And that's really valuable. The second thing, it's so much easier to employ people. As you grow and scale, initially you'll start off with contractors, but eventually you might want to actually have your own team and employees. You're going to want to set up an entity to do that. And finally, the third reason, yes, there are potential tax savings. Now, I'll go into that because the most commonly recommended form of incorporating is an LLC, a limited liability company. And by limited liability, it refers to what I said around protecting yourself personally and separating out liabilities of your business. Now, here's the thing most people don't understand. If you incorporate as an LLC, nothing really changes from a tax perspective. If you are a single member LLC, you are taxed essentially the same way as when you were an unincorporated sole proprietor, because the legal liability is now separated between personal and business, but you're not really getting tax savings out of it. You have to take a second step where you now elect to have that LLC taxed as a corporation. So most folks choose to have their LLC taxed as an S Corp, which is just a fancy way of changing now how you're taxed, and you can potentially save money. An S Corp saves you money because usually when you're taxed, you not only pay income tax, you also pay Social Security, payroll tax, self-employment tax, which can be up to 15.3%. When you have an S Corp, you only have to pay that 15.3% in self-employment tax on what you pay yourself and your employees in salary and payroll. Because whatever you leave in the business, you can still distribute to yourself at any point as the owner, and you don't pay that 15.3% tax on it. Mm-hmm. So you have an LLC, which helps you from a legal liability perspective. You choose to get it taxed as an S Corp, which now means this whole chunk of self-employment tax you only pay on your salaries to yourself, and a big chunk that you keep in the business that you can still distribute to yourself you are not taxed on. Mm-hmm. That gets now to a whole other bunch of issues, which we can talk about, where people are like, well, then why don't I just set my salary to be zero?
Yeah.
Because if I set my salary to be $0, then my self-employment tax is also zero. And I can compensate myself by just distributing the LLC S Corp's profits to myself at any point. Mm-hmm. And the answer is the IRS is aware of this, and they expect you to set a fair and reasonable compensation. Mm-hmm. So there's different guidelines on, hey, what is, in a way, the minimum salary you can pay to yourself where the IRS feels like that's legal, mm-hmm. and you minimize your self-employment tax mm-hmm. without getting in trouble from a compliance perspective.
Correct. Yeah. So I'm actually set up as an S Corp. Nice. And there's some huge benefits to being an S Corp aside from these tax benefits. And one of them that really helped me was during COVID. Because if basically, to make it simple, when you're an S Corp, you are also an employee for your business, right? So I'm the owner of my company, but I'm also the one employee for my company. So I write myself an actual physical paycheck every month. I actually pay myself $3,000 a month. Exactly.
Yeah. So $36,000 a year.
Yeah. And then, but there's tax on top of that. So essentially to pay myself that much money, I pay an addition. Total, I pay about $5,380 something, and $3,000 goes to me, but then the rest goes to taxes. You got your Social Security, medical, and then unemployment, right?
Yeah, that's the self-employment payroll tax I was just referring to.
Exactly, yep. Right? So what's great, like I said, is when COVID hit, my business completely took a shit. I was primarily doing weddings, and then all social gatherings came to an end. So I literally lost all of my business. Yeah. It got to the point where my business didn't have enough money to pay payroll. So because of that, my employee, which was me, was able to go on unemployment. And I don't know if you remember, but unemployment during COVID times was amazing.
Yeah, totally.
And they had all those extra benefits and bonuses because of what was going on. So I was actually making more money from unemployment than I was paying myself before.
Yeah.
And it was just because I was fortunate enough to set myself up as an S Corp,
I really love that. And it makes me think of two things. The first one is, again, to your point, you're an employee of your own business. It is far easier to also figure things out like insurance mm-hmm. and like retirement, because like you're running a company. You can have your own company retirement plan.
Yeah.
Because you've now formed an entity. And the second thing on, I guess, like why this stuff is so important, like during the pandemic, there was stimulus money that the government came out called PPP. It was the Paycheck Protection Program, which many businesses literally got thousands, millions of dollars mm-hmm. in loans that were forgiven. So it was actually free money. And in 2020, I went around to YouTubers asking, hey, do you want this? I'll help you apply and get access to PPP money. And they said no, because they just didn't know what it was.
Yeah.
And so again, it sort of reinforces this broader point on like why we're even talking today on you should care about this stuff.
With new creators, when should creators consider creating a business entity?
Yeah. So I think in terms of creating a business entity, earlier is better because it's beginning to create that separate trail of personal versus business, which is good from a liability perspective. Now, it doesn't cost that much. You can do it yourself if you go and look up like LegalZoom. You can pay lawyers to do it. Usually it ranges anywhere from like a couple $100 to like $1,000. It's not that much. There's another question though on when should you then elect to have that LLC taxed as an S Corp? And the answer there is a little bit trickier. I would say it's probably not worth having your LLC taxed as an S Corp until you're making, say, at least $80,000, $100,000 a year. And here's why. It's a lot more paperwork and cost to maintain an S Corp. It's more money to then file for it. And you have to additionally do things every year from a paperwork perspective to keep your company in good standing.
Working with a CPA or something like that, there are more things to file,
Yes.
So on top of your quarterly You might have all those payroll taxes that are need to get done.
Yeah.
So there's just extra things that cost extra money
Yeah.
to file.
It'll cost more. Like literally, if you work with CPA, he or she will charge you more if you have an S corp.
Yeah.
So definitely, I'd say only if you're making $80,000-$100,000 plus.
And I think one of the benefits about creating an entity is once you have a business license, you can go to the bank and then you can set up a business bank account. And that's going to be the easiest way for you to separate your personal expenses from your business expenses. Whenever I go to a grocery store to purchase groceries for me personally, I'll use my personal card. Whenever I'm going to buy something for content specifically, I can use my business card. And then I'm able to track all of those business expenses much easier. And eventually, what makes that great is now when it comes to writing things off, everything's just all in one bank account.
What I also love about a business bank account, not only is it good from an organization POV, it also keeps you compliant. We talked a bit about the whole point of forming an entity is to separate out your personal and business in case you get sued. Well, guess what? Even if you have an LLC, if you've mixed together your funds, for example, you're just putting everything into one personal bank account, even if you have an LLC, the courts won't care. It's something called the corporate veil. That's like what separates out personal versus business. And when you've mixed things like that, it's called piercing the corporate veil. So you need to have a business account to even reap really the benefits of having your own incorporated company. I'll also add, at Carrot, we're literally in the process of building business banking services for creators right now. So I 100% agree with you. It's something you should probably get.
Yeah, definitely.
There are so many different types of write-offs for creators. And I think 3 I always really like to focus on that a lot of creators aren't aware of. Number 1, home office. Many creators work out of where they live. And if you calculate what you spend on rent and utilities and such, figure out the percentage of your home that is used for business purposes, for instance, shooting content. You can now write off the percentage of your space you use for business multiplied by all of those rent expenses. So say you pay $1,000 on rent and you figure it out that 30% of your space you're actually using for business purposes, 30% of 1,000, that's $300. You can write off $300. Like that's meaningful savings.
What's great is like my apartment, I know it's exactly, 700 square feet, which isn't that big in Hawaii. Well, actually, it's kind of huge in Hawaii, but 25% of it is our home office. So we only have our desk, our computers. I use for storage for all of our equipment and everything. So I'm able to write off 25% of our rent. And that also includes 25% of our electricity and 25% of, the utilities that come along with all those expenses as well. One thing that was important that my CPA told me, and this might be different for all states, my business had to be on the lease though. So when we signed our lease with our property management, I made sure to also include my business entity on that lease. And that allowed us to write off those expenses. My CPA specifically told me that that space has to be made for business.
Dedicated,
So it couldn't have a bed in that room,
Yes.
you know what I mean, where people could sleep. And it had to be used for business.
Yes.
So as a cooking creator, you would think you would want to write off your kitchen. Unfortunately, that wasn't something I was able to write off because we use it for
personal.
Yeah, exactly, right. The advice we're giving here, it's different in different states and different things.
Phil, we're talking a lot from what we've learned through our experiences as creators and working with creators. None of this is meant to be legal advice that you go follow. It's meant to give you guidance for you to research more and talk with your tax advisors in the interest of, hey, how do you do taxes in a legal compliant way and learn to manage your finances better?
Yeah, definitely. And all states are different. So, a lot of the things that we say might work in one state, but not in the other.
Furthermore, I'd say a good goal for us, if you're watching this, is to know enough that you can ask any potential CPAs you want to work with about these questions and vet them. Because if they're not even aware of some of these basics we're talking through, they're probably not the right person to work with you. And I'll also add, if you're a creator, we actually help connect creators with good tax partners as well. So just throwing that out there.
Yeah, definitely. And you do more than that though, right?
Yes. We also help with credit, taxes, going to business bank accounts and more.
Yeah.
But ultimately, there are so many good CPAs out there. Just at least know something going in around what we're talking about so you can quickly assess if they're good.
Yeah. And I think that's what's great about this video specifically is that there might be some questions that you didn't even know that you should ask or some topics that you should even know that you should bring up. So that's the whole reason that I'm making this video.
This actually is the second write-off I wanted to talk about. Props, what you use in your video, or even for a cooking creator, meals and food. So folks often ask me, like, say I'm making a video and I bring in this goofy mask. Can I write off that mask? To your point, you can only write off that mask if it was strictly for business purposes. For instance, if you bought that mask and you're now going to go wear it tomorrow at like your friend's birthday party, you're theoretically not able to write off the full business value of it. This pertains to clothes. A lot of creators also ask me, hey, I like bought this jacket for this video. Can I write it off? Technically, you can't if it's also going to be used personally afterwards. There are some exceptions around like if it's clothing is like protective gear or if it's like a uniform with your logo on it, then you can write it off regardless. But generally, you're only supposed to write off clothes that was not going to be used personally. Now, for a food creator, if you're making a meal though, and you're making it for content, like that actually you can write off.
Exactly. Yeah. And it goes into other things too. Sometimes people ask me, can I write off my haircuts? You know, you technically can't, because even though you got a haircut for maybe a shoot, you're still going to have that haircut after, you know.
A lot of personal use.
Yeah. And makeup too. You can't write off makeup. But there is another side to it. Like, for example, maybe you hired a makeup artist to do your makeup for a shoot for something specific. Like maybe you did a photo shoot for your cookbook or something along those lines. That is something, or I had a hairdresser that did your hair for that shoot. That's something that you could write off.
Or like, exactly. If the makeup or hairstyle was specifically for this shoot and like after you like, I don't know, changed it back or whatever, you can actually make a case. And my personal belief is you want to be compliant when you file your taxes. You also like want to go and get all the write-offs you're eligible for. And that's why we're sort of running through so you're aware of them. But you don't want to do anything too crazy, because like the risk that puts your business at, as well as just like the mental time and energy to figure it out, like use that just on growing your channel.
Yeah, definitely. I think too, like going back to like some of props or certain things like that. So the way that I record food in my books is I actually consider it job supplies. You know, they're things that are required to do the job that I'm able to write off, you know. Another thing is appliances could be a tricky one, because that is you could be using it personally and that sort of thing. But if you are a barbecue content creator and you're going to be using that barbecue grill or smoker for 80% of your videos, you know, more than likely you're going to be able to write that off. You just have to think, am I really using this for a majority and can I prove it? You know what I mean?
Or there are ways, if you work with your tax advisor, you can write off the portion of it that was used for business purposes. Like, okay, 80% of this was used for business, like this barbecue. That's like a general rule that applies to a lot of things, right? Like home office. Also, like if you get a car, right? And you're using 80% of the time for business, you can, like from a mileage perspective, you can write off 80% of the cost. Like a lot of these rules are like, look, if there's some business or some personal, you can still write off the portion that's business, but you have to be honest about it.
But I think that's a great point, though. I think a lot of things that people want to expense, they think it has to be all or nothing, right? But it could be a percentage.
Totally.
Right.
If you're watching this, I suspect you're probably making cooking videos and interested in leveling up your content or trying to grow on social media. So I made the Cooking Creators Club. It's where I share my step-by-step system on planning, filming, and editing cooking videos with a camera or a smartphone. There are over 60 easy-to-follow video lessons that help you create professional-looking cooking videos for Instagram, TikTok, and YouTube. There are also dedicated modules focused on social media strategy to grow a following and ways to monetize your recipes and get brand deals. I'll flash a discount code at the end of this video, and you can find a link in the description.
A third write-off that I really like, we talked a bit about home office. We talked a bit about like, you know, write-offs and meals. A third one is actually around cars. So this also introduces this really interesting concept. When you like buy a car, you can't write that off as an expense, because it's considered a capital good. Like when something is like cheap and you're just gonna like use it once, for example, like I bought this pencil, that's not like an investment into capital good. That's just an expense, which if it's business related, you can write off. If you're buying like a car or like property or like a factory, those aren't expenses. Those are items where you get the tax savings by depreciating them over time. And depreciation, it's an imaginary cost that's supposed to capture the wear and tear of the item that you purchased, like how much it's less valued now because of the wear and tear. And the government basically says, if it's decreased in value by say $1,000, you can take that as a write-off.
You know, more specific to creators, this could also be high ticket items like cameras, right?
Yeah.
Lenses, these things are thousands of dollars. You know, the camera I'm shooting on right now is like $4,000. Computers, right?
Yeah.
These are like assets or like larger price tagged items that you can use to.
Yeah. Like say you went in, like, I think a great example of something that's clear cut, something you're going to depreciate rather than write off as an expense. See, you build yourself a studio.
Yeah.
And you get like one of those like red cameras, like some of these cameras, like tens of thousands of dollars, like these quote unquote capital goods, like you're going to have to depreciate instead of writing them off. And it's just important to know because sometimes people are like, well, if I like just like bought a house, I can just like write off the purchase of that house. It's like, that's not really how it works.
Yeah. You know, we talked about 3 great things, you know, to consider, but what are some of the mistakes or money mistakes that, you know, creators make?
So I see 3 really big ones. The first one is you don't even know how much you're making, meaning you're really constrained from a creative perspective because you don't know if you can take a bigger risk or launch something new. Number 1. Number 2, you aren't paying your taxes. You're missing quarterly payments or you're not even making the annual payments because the government does not forget. It will assess penalties and fees, and eventually it will garnish your wages and freeze your bank account. And the third one is even if you're filing taxes, you're missing out on this whole host of write-offs that could save you a lot of money in a safe, compliant way.
Yeah. And again, that just goes with tracking, and that's just not how much you're making, but how much you're spending, right? And you could look at some areas that you might be having subscription for products that you don't even use anymore as a creator. And you could say, hey, maybe I can cut this $100 monthly subscription for this app that I'm not using anymore. And there's just all these ways. It's just so important to just understand how much money's coming in and out of your business. That way you can just know how to make moves going into the next month, right? Exactly. You know, let's give some tips for people that are just starting out when it comes to money, you know?
So as a creator, if you've started to make income that you're thinking this is real business, I think here are 3 key pieces of advice. Number 1, literally just pull out a spreadsheet and track your expenses there as a very basic start. Now, there are a lot of simple budgeting apps out there. A great one is You Need a Budget, YNAB. But there are a bunch of these others that you can download as well, because as long as you have some awareness, that's the most important thing above everything else. Number 2, consider incorporating. It's pretty simple. You can Google how to do it yourself. You can find a lawyer to do it. It shouldn't cost more, anywhere from $100 to $1,000. And if you're just incorporating getting yourself an LLC, it's pretty simple. It shouldn't be a complicated process. Number 3, after you're incorporated, you should set up a business bank account, business debit card, business credit card. The whole point, again, of having those business structures is to protect yourself legally and make it really easy for you to track what you're spending in your business so you can get tax write-offs later.
Yep, definitely. And then once you have all those things and you're tracking them, that's when I would mention, or that's when I would say, you should find a CPA at that point, right? And again, the easiest way I think to do that is just find a friend that owns a business that's the most successful person that you know and just ask for a referral.
Yeah, and it shouldn't cost that much. Like just to file your tax returns, anywhere from like a couple $100s to maybe like $1,000 if you've scaled and have a lot of different things going on in your business. When you get really, really large, that's when you also want to find someone who's doing that bookkeeping for you, keeping track on a monthly basis, everything that's going on so that they can then ensure they're filing your taxes correctly. But when you're getting started out, you don't need that.
Yeah, for sure. I just like you were saying earlier, just making sure that you track it yourself really well. Because what's really going to cost you a lot of money with your CPA is if they have to do all that for you, you know? So if you just have all that organized and prepared and ready to deliver to them and everything's where it needs to be, it's not going to take them more time and cost you more money.
Yeah.
So this was just a snippet of a longer conversation that we had, and I have the whole video up on my Cooking Creators course. I'll put a link in the description if you want to know more about the business side of being a creator and how to produce professional quality cooking content. I'll also have a link to where you can find Eric and Carrot if you wanted to find out more about the financial services they offer to creators. And I'll also have 2 videos that'll pop up here if you want to check those out next. I'll catch you in the next one. Aloha.